What's up, everyone? So my team prepared me with some questions to ask, and I looked over them, and I just threw them all out, and we're going to take this conversation maybe in a completely different direction. So I apologize if you came to hear about tokenized securities on Bitcoin. We'll talk about that a little bit, but we're going to talk about some other topics because we're joined by someone that I've known for 13 years, maybe. One of the oldest Bitcoin OGs, Yoni. And I think we can talk about a lot of interesting things. So, Yoni, maybe start by introducing yourself.
Hi, I'm Yoni Assia, co-founder and CEO of eToro. 18 years, founded in 2007, so pre-Bitcoin, trading securities first, and then fell in love in Bitcoin very early, and started buying Bitcoin for eToro's Treasury, probably one of the first companies to do that at $5 and $10. And I think first time we met was in the San Jose Bitcoin conference in 2013.
Which was the inspiration for the Bitcoin conferences that we host today, so full circle. So, you know, Yoni, I think one of your claim to fames, if we are going to talk about the topic we're supposed to talk about, one of your claim to fames is that you are one of the authors of the Color Coins white paper all the way from 2012. Share a little bit about what color coins are. Who were some of your co-authors? Just share some history here.
It's interesting now because they're actually coming back, right? So there's a comeback of ordinals and colored coins. But when we first saw Bitcoin in eToro, we looked at it and we had this aha moment saying, this is the future of finance, right? So this was like pre the term blockchain and everything got blockchained. And we said, we can use the Bitcoin protocol to actually tokenize real-world assets like gold and dollar and actually peg it to Satoshis. And we wrote the white paper and published it on Bitcoin Talk. And there's like a Google group that's all public with all of the OGs of 2012. And funny enough, Vitalik picked it up and sent me like a ping like, can I join the team and write the code for the client? And he said then in eToro's offices, and actually funny enough, this was also, I think this was the start of Bitcoin maximalism, because when Vitalik started talking about creating a new blockchain, basically the Bitcoin maximalists sort of said like, blasphemy, you're not allowed to, there should be only one blockchain, and then he spun out to actually do Ethereum.
Yeah.
And only 12 years later, now with version 30, they actually increased the op return, which was suggested, I think, in 2012 in the Colored Coins protocol.
Yep. No, I mean, I've always thought that one of Bitcoin's superpowers is that you can send Bitcoin anywhere, anytime to anyone. And so a future state, if we're rebuilding the financial system, is like anyone should be able to launch a company. Anyone should be able to issue a security. Anyone should be able to raise money from investors around the world, build a product and service, make money, pay dividends to investors all around the world. Like, that is the permissionless financial system we want to build.
So, I mean, everybody talks about the narrative of Bitcoin as digital gold, right? So I even had that quick dialogue and heard people are still arguing whether or not Bitcoin should also be that layer for tokenization, right? So on digital gold, Bitcoin is king. I don't think anything can ever replace Bitcoin on that narrative of digital gold, but obviously over the past 8 years, everything that's tokenization, and everybody's talking about tokenizing, you know, basically $100 trillion, or I heard even $400 trillion of assets becoming digital, and whether that space is Bitcoin now that opens up to it, or is that still the space for Ethereum and Solana and XRP or others? I think that's still debatable. With a lot of the core Bitcoin community, it seems still like fighting the narrative for just digital gold and thinking that maybe adding all of those assets on top of Bitcoin will hurt Bitcoin. I actually think it should be the main network. It should be that permissionless. If it is digital gold, why not build on top of the Bitcoin network everything else? But you constantly hear that narrative. I think Michael Saylor is very much against having Bitcoin also become something else, like the network for tokenized assets?
Well, I think if you polled the community or the developer scene, they'd say these things can exist on Bitcoin, but they need to exist on a second layer or on some abstracted layer from the core protocol, which I think is a fair argument. I think one of the things that's gotten convoluted in the discussion around like tokenizing securities is that most tokens and crypto coins that have been created are securities, but in order to avoid the regulations that were very onerous for securities, we figured out ways to redefine them so that they weren't securities. And in doing so, we kind of walked away from the idea of creating a company that makes a profit, that pays a dividend, like things that securities definitely do. And so we've seen all these tokens come to be that are worthless, but if we actually just really kind of embrace that these are securities, we should make products that make money, I don't know if the Bitcoin community would see them in the same way that they currently do. The Bitcoin community is supportive of public companies owning Bitcoin. Well, what's the difference?
I think, again, when you look at, I think people are talking about like let's call it the meme coins phenomena, right? So there's, I think, 20,000 new tokens issued a day.
Wow.
Right? So a crazy amount of tokens being issued every day on all of the different networks. I think we're north of 20 million different tokens on all of the different networks. So that size and scale, I think that's very debatable whether you want that on the Bitcoin network. I think now, with regulations maturing across the globe, and I think you had a big part of that, by the way. Thank you for bringing Trump to that conference. I think with regulations maturing, I think now the world of real-world asset tokenization, whether it's companies, public companies, whether it's private companies, whether it's real estate, I think that is the real play of digital assets. But that requires actually the right regulation, not exactly the opposite, which was what until now we had, which is everybody going to meme coin and explaining why it's not a company and it's not a security, and actually issuing real-world assets on top of blockchains and therefore on top of Bitcoin, which is obviously the most secure network out there, makes a lot of sense. So real estate doesn't need to trade in 1 second microseconds, right? It can actually trade at the 8-minute blocks of Bitcoin. So I think it definitely has a place. And I think now with regulators, whether it's regulators like here in ADGM that are very sophisticated around digital assets, and the UAE saying they want to be the crypto capital of the world, and the US saying they want to be the crypto capital of the world, I think between now all of the regulators, we're coming to a place where we are going to see real tokenization of significant assets. You have BlackRock already tokenizing assets. You have Franklin Templeton. So trillion-dollar asset managers are already tokenizing money market funds, and all of the asset managers are talking about tokenization. I don't see a reason now, post V30, it won't come to Bitcoin as well.
Well, I was always very skeptical of tokenizing real-world assets as like a Bitcoin maximalist myself, because these assets, they exist in the real world. And so it's like, okay, as long as you exist in the real world, you can't be permissionless, because there's always a regulator that exists in the real world who can go and apply the laws to that real-world thing. I think one of the lessons I've learned the past couple of years is like, if you get big enough, you can brute force a change in the law to accommodate, we used to think stablecoins, one day they'll be banned and shut down, or, you just reach a critical mass where the regulations have to contort to you versus the other way around. Talk a little bit about that change. You've been dealing with the SEC for a decade. How has that changed over time?
Right. So first, like the vast majority of our business, so we have about 40 million registered users worldwide, about 4 million brokerage accounts that trade both crypto and stocks on the eToro platform with about $20 billion of assets. And we're regulated everywhere. So Europe, UK, Australia, Singapore, Abu Dhabi, and the US. So we've been dealing with regulators and talking about digital assets and crypto assets since 2013. So we were the first European regulated broker to actually list Bitcoin in 2013. Unfortunately, just a month before Mt. Gox collapsed. So we listed it after a year of work at $1,200, seeing it drop to $150. But we've been working with regulators for, ever since to explain blockchain, to explain crypto. But I think just, it's just coming to maturity. And the US obviously was I'd say the jurisdiction where you had the highest amount of uncertainty under the last administration, or people said it's not really uncertainty. They were very negative against crypto.
They were certainly negative.
They were certainly negative about crypto. What was uncertain is how do you actually get regulated? So they were blocking everything in the US, right? That they were basically suing everybody in the US. And the minute administration changed, and now you have the most friendly administration you could possibly think of for crypto. So you have the chair of the SEC saying, all US capital markets are moving on chain. That's a huge statement coming from the largest capital markets in the world. This is, when we went public this year, we met investors, all of the investors that, that manage $30 trillion. So we had 180 meeting investors that combined managed $30 trillion. So it's crazy to think of how large US capital markets are. And they all already understand Bitcoin, they understand blockchain, they understand the concept of tokenization. And now you have the US government and the US regulators saying, we're not only supporting this, we're pushing to move all capital markets on chain. And you really feel that change in the entire industry, right? Companies going public. You have now stocks trading 24/7 already on chain. So like the pace of innovation now in crypto is, I think, accelerating because basically the US regulators are saying we're open for business. And that's a huge shift.
It feels like that can't be unwound either. Like it feels like we've kind of crossed the Rubicon where once you issue enough of these assets to enough investors, to undo it would be massively damaging to the public.
I think crypto generally is already too big to fail, right? There's always a statement. You get to a certain point where it's too big to fail and you can't unwind it. So Bitcoin is definitely there. But I think, again, tokenization is already there as well, because if you have BlackRock and Fidelity and Franklin Templeton tokenizing things on Ethereum, and you have like the largest regulated entities in the world already going into that space and launching things, then it's, I think, beyond the ability to sort of rewind it. But but as you know, there are limits to what regulated companies can do. So they actually need the ability to reverse transactions or block transactions, things that are a bit taboo in the Bitcoin world of permissionless and everything decentralized. So I think we'll always have the wild, wild west of crypto and the unregulated space of crypto, and that will continue. And in parallel, we'll have the world of regulated digital assets that will eventually be bigger, right, because it's real-world assets, than just crypto. But the crypto space will always run faster than the regulated space. You can just run much faster when you're talking about non-custodial global adoption.
Well, I need my Bitcoin to be permissionless and decentralized, but when it comes to securities, I'm slowly starting to understand why the security laws we have were created, and the benefits to some of them.
You also run a public company.
Yeah, and I want to get to that. So we're going to talk about that in a minute. But first, talk about, okay, let's say we've crossed this Rubicon, we can't unwind this tokenization event of securities. Then where's the money to be made in this process? Like, who's going to make the money? How are they going to make it?
Well, we're making a lot of money. So brokerage space, I think, is a good space to be in. I feel we're public, so our numbers are public. The last 9 months, the last 12 months was roughly $900 million revenues and $300+ million profit. So I think the brokerage space, and you can see it here in your conferences as well, that will always be a significant space. And again, because we see two very big shifts in parallel, which are both related to user experience. And one is, the largest generational transformation of wealth in history. So us, Gen Y, are becoming the richest generation on the planet gradually. But still today, 90+% of wealth in the world is with people who are 60+-year-old. So less about crypto and permissionless. But that's $100 trillion moving from older generations to younger generations, to Gen Y and Gen Z. And that's a huge secular trend of $100 trillion moving from one generation to another. And our generation expects everything to be with the latest technology, on mobile, on real time. It's quite amazing. I bank now with some of the largest banks in the world. They don't even have a mobile app, right? So that is a huge transition, and at the same time, there is $100 trillion plus moving into digital assets on the back end, right? And it's both about the user experience, and the user experience is people who experienced crypto just demand for their assets to be 24/7 tradable, right? They demand their assets to be almost real-time transferable, and they require sort of digital interaction with their assets and potential self-custody of those assets, right? So that's a user experience demand coming from users to basically, in my view, all assets in the next 20 years. And I think the younger generation even, which now we need to cater to Gen Z as well, and I always feel old talking to them, I think their expectations are really crypto native, right? So they tell us, they started with crypto. We need to explain to them why investing in stocks makes sense. And they're starting in crypto, by the way, usually, but in the wrong crypto, in meme coins. And then we need to explain to them to de-risk meme coins into Bitcoin. And they're like, you're old.
Yeah. Well, from the perspective of an issuer, like I've had many rodeos in crypto. Like, there's some things in crypto that I wish existed with legacy assets. So you mentioned 24/7 trading, which is a big one. Very annoying to be shut down over the weekend. Very annoying to be shut down when a foreign market is open that you care about. But it's really nice to also have a block explorer where you can see in real time who owns your stock, how much do they own.
It's crazy that you don't know as a public company who your shareholders are.
Yeah, no, absolutely.
It's like that you know it in a 45-time delay. Like as a private company, you always talk to your shareholders. And as a public company, you basically, not only the retail, even institutions. I do think, by the way, that makes a lot of sense for capital markets to move on chain. So assuming this happens, and if they're saying it's happening in the next 2 years, we're going to get a lot of the benefits of basically blockchain and digital assets as public companies as well.
We had the same issue. We just completed a financing. We had to transfer shares to the investors in the financing. It was a huge pain in the ass to do. I mean, we have some investors that have been trying to get a transfer to happen for weeks. And you compare that to an airdrop that existed in crypto. I mean, I would love as an issuer to have every person who comes to the conference just get airdropped $50 of stock in my company. Like, that would be cool. But you just can't do it with the existing system.
Yeah, we can airdrop to our customers stock. We do that.
Okay.
So we actually, when you bring if you deposit your crypto into eToro, we'll actually airdrop you 1% of a stock into your eToro account.
Okay.
So we can work on that for you.
Okay, cool. Well, so now I want to pivot the conversation a little bit because I need a little bit of therapy and a little bit of advice up here. So we recently took our company public. You've recently taken your company public. I've been getting my ass kicked as a public company. How has your experience been so far?
So far, so good. But I think we've been able to really mature the company to a point where we have significant revenues, double-digit funded account growth, and significant profitability. So when we first look at public markets, our strategy was basically growth at all costs, right? So we were increasing revenues, but losing actually money when you look at net income. And then we looked at going public through a SPAC, and because of that, we've had that experience of actually working and meeting a lot of the big investors in 2021, and actually sort of reconciling the different views from private markets, where you have a VC telling you revenue growth, I don't care about profits at all, and if you lose money, it's fine, we'll give you more money, to public market investors who are like, okay, we need to understand how your P&L looks like, not your EBITDA, your actual net income. Yep. What's your cash conversion to your balance sheet? What is your balance sheet and what's your cash flow, right? So a lot of things that, again, private investors are less focused on, VCs are less focused on, but public markets are. And then when 2022 came along, which was a great ass-kicking to the entire industry, with obviously crypto declining, I think
What happened in 2022?
What? but I think what we did there is actually we switched in a very bad year of crypto to profitability, right? So we moved to profitable growth strategy. And I think that when we got to the markets now, after showing we're actually profiting and adding $300 million into the balance sheet and growing the user base and the assets of our customers, then you have a much wider range of potential investors, not only the growth investors in the US, but the value investors in the US, the tech investors in the US. So I think that process for us was very good to come to the markets as a public company in a much more mature way.
Do you all have any Bitcoin on your balance sheet?
Yes, we have crypto assets on our balance sheet, which are actually a part of basically working capital, right? So when customers trade in eToro, so we bought about $50,000 worth of Bitcoin at like $10 average. It went to $50 million, and that balance sheet actually is what kept us being able to trade during the 2017 rally, where we saw our business grow from $60 million to like $400 million very, very fast. And we actually use the balance, so we use our balance sheet for working capital, both for enabling leverage to customers. So if you want to use $1,000 but want to buy actually $2,000 worth of Bitcoin or $10,000 worth of Bitcoin, depending on your expertise, you can do that, and we'll use our working capital on our balance sheet, which is in crypto, to do that.
Well, not to put you on the spot, but how many Bitcoins do you have today?
That I cannot share as a public company, but I think you have about 6,000, right?
Yeah, that's right. See, I don't know how many you have, but you got to pump the numbers up. So, what do you think? You operated your company as a private company for many years. Like, the transformation to a public company is new. Like, what do you think is the biggest superpower that you unlocked as a public company, and like, what can you do now that you couldn't do previously?
I think the biggest thing is, like, we have now $1.8 billion balance sheet, $1.2 billion of cash and short-term investments. So we're able to deploy more capital, whether it's on organic growth or potential acquisitions, right? We have basically the shares that are a public currency and capital, and what you learn as you scale, and of course everything takes time, but the depth of public markets in the US and public markets in general mean that if you want to do something really big, you have access to that capital to even scale that up. So I think the opportunities for us to expand into new regions, again, whether inorganic or organic growth, I think that unlocks a lot of potential superpowers, again, for a company that has been in capital markets, in the stock markets, and the second is trust. So it's always about building trust with our customers, growing from $20 billion of our customers to eventually $100 billion or $1 trillion. That requires us to grow with our customers and for them to trust us. And I think as a public company, they can see our balance sheet, our share price. They can become shareholders as well. So that's another great superpower.
How many of your users do you think are shareholders?
I have the numbers, but I can't disclose them.
Okay, so we're out of time, but I have one more question. So for the people in this room or who are watching on the live stream who are building a company, what would be your advice to someone who is interested in eventually taking their company public or running a public company? Like, what would be your advice?
I would generally say like investor relation communications. That's very consistent. I've been running the company for 18 years, and for the past 18 years, every quarter, I provided a shareholder report with an update on strategy, P&L, balance sheet. And I used to send it to my private investor. Again, I have those 18 years of quarterly shareholder update, and I was always surprised. So my wife here is investing in private companies. So she invested in about 100 different startups through her company. And she told me, you don't know how unique that is, that a lot of startups actually don't send their shareholders, here's an update, here's my P&L, here's my balance sheet.
Like a shareholder letter?
Every quarter, a proper shareholder letter with an update. And I think building that cadence and investor communication early is very important as a company.
Okay,
that's my view.
I am taking that advice. That's a good idea. So, all right, well, thank you all for listening to this session. We're going to wrap it up there. Cool.
Perfect.